Right. Hello, everybody. We started. Hello, everybody, and welcome to your overseas home. If you were at the earlier session, welcome back. If you just arrived, welcome to your overseas homes virtual event for March 2023. My name is Christopher Nye. I'm senior editor at Your Overseas Home and Spain Property Guides. I've been helping customers relocate to Spain and buy there since 2003, when I started on a magazine called Everything Spain, and then moved on to A Place in the Sun, and then onto here. We help you buy in Spain via our online guides, our newsletters, our property mailers, and also by connecting you directly with trusted experts to support you with your purchase and your life in Spain. We've all got to this point via saving and by looking after our money, and we want to ensure that continues when you move to Spain or if you retire there. So it's great to have you all with us today. I am joined by Gerald Turner from Chase Buchanan. Chase Buchanan are wealth managers. They operate all over the world, and they can help you whether you come from America or if you come from the UK. If you have questions for Gerald as we go along, and I'm sure you will, please type them in the questions tab, the Q&A button below. If we don't get round to them all, don't worry, Gerald and his team will be available in their booth within the exhibition hall to answer any more questions. So, Gerald, would you like to introduce yourself and share your presentation, and then we'll have some questions and answers afterwards.
Sure. Okay, thank you, Chris. Let me see if I can do this. Does that look okay to everybody?
That looks great.
Yeah, okay.
Yep.
Good morning. Like Chris says, my name is Gerald Turner, and I'm going to present Moving to Spain, the Financial and Tax Essentials. I am a chartered financial planner and a private wealth manager working for Chase Buchanan on the Costa del Sol. I've been here for 23 years. Sorry, I've been working in financial planning for 23 years, but been in Spain since 2008. I'm currently in Torremolinos, living in Torremolinos, and I'm, as you can see, highly qualified chartered financial planner. Been working with British people who come and retire out here since 2008, so I've got 15 years of experience of working with expats. So let's talk about Spanish tax and tax residency. The Spanish tax year runs from the 1st of January to the 31st of December, so it's just a calendar year. And you can be deemed tax resident if you spend more than 183 days in Spain in that calendar year. So it's quite straightforward. You spend more than half the year in Spain, you will be considered tax resident. There is also other little known facts about tax resident. You could be deemed tax resident even if you don't spend 183 days in Spain, if your centre of economic interests are in Spain. So that's to say, if you were working here or you had a business here, you could be deemed tax resident in that circumstance. Or if your wife, spouse or children are resident in Spain and you don't spend 183 days in Spain, you could also be deemed tax resident. Now, Spanish tax is a very complicated thing. There are 17 different autonomous regions in Spain, all with tax raising powers. Essentially, half the tax goes to the state, half the money goes to the autonomous regions, and they vary the tax rates and how the taxes work. So it does get quite complicated. If you become a Spanish tax resident, you have certain obligations. And I will go through these in more detail, but just to summarize, a Modelo 720, which is a declaration of your overseas assets worth more than 50,000 euros. You have to pay income tax on your worldwide earnings. You'll pay capital gains tax on any capital gains you make in that year. There is something called wealth tax, which we don't have in the UK, and something called a solidarity tax, which is brand new this year. And there is also succession tax, which is Spain's version of inheritance tax. So I'm now going to run through those different taxes and what you need to do. So the Modelo 720, like I say, declaration of overseas assets of worth more than 50,000 euros as at the 31st of December in the year that you're a tax resident. You need to report that sometime between the 1st of January and the 31st of March. So knowing as I do Spanish accountants, they are all doing they're very busy right now with Modelo 720s because they won't have done them in January and February, that's for sure. There are 3 different asset classes that you would declare. So cash, bank accounts. So if you have more than 50,000 euros in a bank account or in 2 or 3 different bank accounts overseas, then you need to declare that. If you have shares, bonds, unit trusts, life insurance, any kind of investment policies really worth more than 50,000 euros, again, overseas, that's declarable. And if you have property, if you kept, for example, your UK property, it's the purchase price that is declarable. You don't need to be going back and getting a revaluation or anything like that. If you paid more than 50,000 euros for it, you need to declare it. You would redo this return, this Modelo 720, if the asset has increased in value by 20,000 euros in a certain period, or if you sold any of the assets. So if you sold some shares, you need to do a redeclaration. Income tax, wealth payable on your worldwide income. There are 2 different tax rates. There is the general income, which is, earned income, essentially, pension income generally, and savings income, which is the same as capital gains tax rates. You need to complete your income tax return by the 30th of June the year following. So like I say, calendar year, you're a tax resident. If you're a tax resident for 2022, you need to do the tax return by the 30th of June 2023. The tax rates vary wherever you are within Spain. So the tax rates in Andalusia are different to the tax rates in Murcia, are different to the Comunidad Valenciana, are different to Catalonia. So I won't go into the tax rates, but the state rates are set between 19 and 47%. The top rate in Andalusia is 47%. The top rate in Comunidad Valenciana is 53%, but that's only if your income is above 175,000 euros. Andalusia has been changing its tax rate recently and is becoming quite low tax. You'll see that later in wealth tax. Comunidad Valenciana has got higher rates of taxes, generally. The personal allowances, the basic personal allowance is 5,550 euros. For someone aged between 65 and 75, it's 6,700 euros. And for those over 75, it is 8,100 euros. There is additional allowances for doing joint returns, which is an additional 3,400 euros. If one of you is the main owner, it might be better to do a joint return. Earned income, there's another 2,000 for earned income, and that does include pensions as well. I've already talked about the age allowances, and having children or being disabled will get other allowances. But roughly speaking, if your income is below around 14,000 euros, you won't pay much in the way of income tax in Spain. The second type of income tax or savings tax is savings and capital gains tax, and they're the rates there. You do pay tax on your capital gains on the first euro. In the UK, there are allowances which are reducing, and in a couple of years will only be £3,000. But on the first euro, you pay 19% tax. And that 19% tax goes up to 6,000, and then it's 21, 23, 27, and 28% tax. Wealth tax is quite a difficult tax that they've introduced in Spain. It is determined by the autonomous regions, so there is a lot of variation. It varies between 0.2 and 3.5%. So moderately wealthy people won't pay much in the way of tax. Very wealthy people will pay a lot of tax on this. The state allows a personal allowance of 700,000 euros. Comunidad Valencia has reduced that down to 500,000. There is a main home allowance of 300,000 euros per person. So following the state rules, a married couple with equal wealth between them won't actually start paying the wealth tax until they've got about 2 million in wealth. In Andalusia, they've just recently abolished this, so it doesn't matter for Andalusia, and it always was exempt in Madrid. But the state, a couple of weeks after Andalusia announced that, the state came back with solidarity tax, which was quite a shock. And solidarity tax really will only affect very few people if you are very wealthy. And I'll explain it. So it's 3 million, but you have the same exemptions as the wealth tax. So there's another million allowance, really. So each individual would have to have more than 4 million euros to start paying it. If you're a married couple, that means to 8 million euros. It's reckoned that only 23,000 people will actually pay this tax in Spain. So unless you're very wealthy, it's really not going to be a concern. Inheritance or succession tax. This is phenomenally complicated. I will try and make it simple for you. It's paid by the beneficiary, not by the estate, as in the UK. It's only payable on assets or beneficiaries who are in Spain. So a married couple that come over here and live in Spain might be more caught by it than, say, a single person leaving money to his children in the UK. The exemption rates and multipliers are determined by the closeness of the relationship to the deceased. So what that means is, in the main, children and spouses are paying lower rates of tax than brothers and sisters, and brothers and sisters will pay lower rates of tax than friends. Unmarried partners can pay high rates. So unless you become pareja de hecho, which is common law partner in Spain, you could be caught out quite nasty in Spain. So I'm constantly telling people to get married. It's a good tax avoidance thing in Spain. The standard rates go from 7 to 34%, but they can be multiplied and reduced depending on the relationship. There's an 82% rate which often gets quoted. That's essentially for if you left a lot of money to a very wealthy friend, they could be caught with 82% tax. It's going to be so rare, it wouldn't be a family member anyway. In Andalusia, this is what I was saying, Andalusia is very low taxes, $1 million allowance and a 99% exemption for spouses and children. So essentially, if you're leaving it to your wife or husband and to the kids, then they're not going to pay much in Andalusia. Just a quick thing about Spanish wills. They do have enforced heirship system. They leave most of the money to children. If you wanted your estate to be passed to your spouse first, then you have to put something in that says you want your estate distributed under the laws of the country of birth. This is an EU rule. It's known as Brussels 4. It's quite straightforward. Most Spanish lawyers know about this, and it's not usually a problem. So let's just talk about the pitfalls to avoid. The UK is great for saving. There is, lots of products that are tax-free. ISAs, national savings, income products. Spain doesn't have any of these, and these would become taxable in Spain. Your offshore bonds that aren't Spanish compliant, we do generally recommend that people invest in Spanish compliant investment bonds, but offshore bonds can have huge tax implications. So if you even in UK onshore bonds, if you're taking your 5% withdrawals, which are tax-free in the UK from a bond, you need to really look at that carefully before you move to Spain. UK, let's talk about UK property. As I said, you become Spanish tax resident if you spend 183 days in Spain in a calendar year. What you want to be wary of is selling a property, for example, in the UK in February, and then moving to Spain, for example, in April, and staying in Spain for the full year. It's possible, depending on your circumstances, that could be subject to Spanish capital gains tax. So if you are thinking of coming in the first half of the year, tread carefully if you sold the property in that year. So if you sold your property today and you move over in May, and you're going to spend 183 days, think about that carefully. And there may be exemption for people over 65. I won't go into that though. And also, if you have pension and you want to take your 25% tax-free lump sum, it's tax-free in the UK. It's not tax-free in Spain. So be careful of the year that you take it in. If you come over, if you took the tax-free lump sum in February, moved over in April, that becomes fully taxable, and that will be taxable just under general income. And if you're beneficiary of trusts, or have a trust, then you need to look at that as well carefully, because Spain does not recognise trusts. So speak to a regulated financial advisor before you move over. A few years back, I was UK FCA regulated and passported into Spain to give advice in Spain. Because of Brexit, that is no longer available to UK advisors. So your UK advisor can't passport into Spain to give advice. And neither, well, I can't. I'm now regulated through Cyprus and passported into Spain to give advice here. So your UK financial advisor won't be able to help you. Make sure you review everything. If you've got savings, investments, pensions, then there's talk about them. In cash in ISAs, if they've got massive capital gains, and some of them might have if they've, if you've had them for years and years and years, could be advantageous to in cash before you move to Spain, and take all those capital gains that will be tax-free in the UK. And like I say, if you're selling your main home, be careful. Make sure you complete that transaction in the year before you become tax resident. And I think that's the end of my little speech there. We say trusted advice made simple. My contact details are on the screen. If you want to get in touch.
Excellent.
Thank you.
Right. Thank you very much, Gerald. Now, okay, so that was so comprehensive. You covered off quite a few of our questioners already. However, just in case people didn't get it the first time or they need it reiterating, I'm going to ask a few questions again. So I know you've covered this, but someone has asked, if I do not need access to my personal pension for at least 10 years, would your advice still be to take my 25% tax-free lump sum before becoming tax resident?
Possibly. Very much depends on your circumstances, because I mean, it's a complicated question, but because of UK inheritance tax, there are advantages in the UK because you could still retain domicile, and the pension will be IHT free. Now, if you're wealthy, you've got more than $1 million in assets, then that could become an issue for the UK. But generally speaking, for most people, if you want to take your 25% before you come to Spain, it makes sense because it's tax free. If you wait, you can't take it because it will be a massive tax bill in Spain. But it's not.
Okay.
There's not one definite answer to that. It's good, but it could have UK inheritance tax issues.
Okay. Okay, Craig has asked, if you are employed by a UK company on a remote type contract, living in Spain on a non-work visa, will you pay both Spanish and UK income tax? Quite a few elements there.
Yeah, that is quite. I mean, I don't think you can do it. If I'm being honest, if you're working in Spain full time and you haven't got a work visa, yeah. I mean, it's not. Yeah, I mean, if you're living in Spain, you have more than 183 days in Spain, you're tax resident. But how you would do that without a work visa, I don't know.
Okay, well, on that subject, you said that you could, although the basic rule is 183 days you're tax resident, if your main, I forget how you phrased it, but source of economic, your economic base is still elsewhere, well, can you do that the other way around? So if your main economic base is still in the UK, your wife works there, can you avoid becoming a Spanish tax resident?
So sorry, your main income is coming from the UK, and
yes.
you are spending most of your time in Spain.
Yes.
Working. Yeah, I mean, there is the UK tax rules are even more complicated than the Spanish tax rules.
Yeah.
Spanish tax rules are quite simple. 183 days, you're tax resident. With the UK, there's something called connecting factors. So having your wife and spouse, or your business, and having your children in the UK, you don't have to spend much time in the UK to be tax resident there. So yeah, that would be a very complicated situation, and would have to be discussed with tax advisors, to be honest.
Yeah.
But yeah, it's not straightforward at all.
No, well, I mean, that's why we need someone like you.
Yeah, you can be tax residents under the rules. You can be tax residents in both countries. That's not a problem. Definitely
Okay.
under the rules, but they will decide which one you are tax resident in. There will be a decision made, and it might not necessarily be by us. It might be by the authorities.
Okay. Do they
Yeah.
speak to each other? Does someone
Yeah,
in
yeah, of
Spain
course.
ring
Yeah,
up?
yeah, yeah. I mean, it's not. I mean, there's people with very complicated tax affairs. It's
Yeah.
not unusual for. It's not that unusual for people to be caught out by both rules, UK and Spain. Because I mean, the Americans have they have to do tax returns if they retain their citizenship. Phenomenally complicated business. So yeah, they definitely talk to each other.
Okay. And would you do that for us? Would if we work with you, would you do that? Would you be the kind of go
Yeah, I
between?
mean, we can certainly talk through the issues, and then refer you. You're probably better off talking to an accountant, whether that be a UK
Sure.
accountant or a Spanish accountant. We're wealth managers, but we could tell you that whether you've got an issue or not, and then say, look, and refer you to a reputable accountant.
Okay. Right. Lucy is asking, are the tax laws the same if you are a current Irish resident?
If you are a current Irish resident and you're moving over to Spain, yeah, I mean, the tax laws have stayed the same. You're allowed. It's easier for you to move over here as an Irish citizen. Sorry, not an Irish resident, but it's easier if you're an Irish
Yeah.
citizen to move over because they're still in the EU.
Yeah. Okay. Adam is asking, if you were to run a small business in Spain with a turnover of, say, below 250,000 euros, what taxes would you be liable for?
It depends how you've structured that business. If
Yes.
it's an SL, which is a small business, then you're subject to corporation tax, and that's basic 25% of the profit. And then if you pay yourself, you'll be subject to the income taxes that I've mentioned as an autonomo. You could have a small business and own it as an autonomo, as a self-employed individual, but yeah, there's two, maybe three different ways to do it.
Okay. So all these individual cases, they are some of them are incredibly complicated, and some of them are very simple. But let's go back to a few big picture things. Overall, in the overall scheme of things, would you say that we're taxed more, our kind of buyer of, are we taxed more or less in Spain?
If you're earning money in Spain, or you are having your pensions paid over from the UK, you will, if you're earning, you've got a good pension coming in, you'll probably pay more tax. But that said, the cost of living is so much lower here than in the UK.
Yeah.
If you have savings and you live off, you lived off savings and then invested that money in a tax efficient manner in Spain, there's no reason why you would pay much more tax in Spain than you do in the UK. But yeah, if you most of your income's coming from pensions in the UK, you could pay a lot. You could pay quite a bit more tax in Spain. And there's another one we haven't even touched on: annuity taxation. You've got annuities; they're quite tax efficient for Spain. It's very difficult to say one way or another. But the cost of living here is so much cheaper anyway, Chris. It really does
And
save you quite a lot of money.
there's other taxes like council taxes is so much less, isn't it? I believe over there.
Yeah, I mean, the council tax can be, I mean, it depends on obviously your property in the UK, but yeah, it can be quite reasonable here. I've not seen ridiculously huge council taxes, But I mean, it's like I say, the income, you'll probably pay more in income tax, but you know, the cost of living is so much
Yeah.
lower. Utility bills, I mean, I don't even, my electricity bill's 60, 70 pounds. It's been 60, 70 pounds, 60, 70 euros this month, a month. It's nothing like the UK.
Okay.
I don't actually know why that is, but there we are.
Okay. Your sound's going a little bit. You might need to.
Oh, is it?
You might. No,
Okay.
that's fine now. That's fine now. When you
I think I
when
leaned in, Chris.
you just went a bit wobbly there. Okay. So just explain again about when you retire abroad, because if it was me, I'd be thinking, right, spring's here. I'm heading off to Spain. That would not perhaps be the most sensible time to move, though.
Sorry, what's the question? When people have retired?
Yeah, it was just. I know you mentioned it already, but just to reiterate the point about when, if you're retiring,
Yep.
I would imagine most people retire in the spring. That's when I would retire, but that might not be the best time to move to Spain, because then you'll be tax resident there.
Yeah, I mean, I mean, it depends on what you've done and what you've realised and when you've done it. I mean, when you sell your house, or when you take your tax-free cash, or when you encash your ISAs, these can all be tax-free in UK. So if you do one of these things or all three of these things in the year that you are tax resident, they can become taxable in Spain. So it's, and obviously, like I say, spending 183 days in Spain is the issue. So if you come over in July, you're going to be safe. You're not going to spend 183 days in that period. Just one thing to note for retired, just to Jonas, what retired people, if they're over 65, when they sell their home, and if as long as they've had that home for 3 years, and they could actually move over to Spain and become tax resident and not pay capital gains tax on it, because there is a rule for over 65's main home, 3 years, you don't pay tax on it. But like I said, that's a conversation, because it's detail. You know, I know the detail, but it's best if you have these kind of questions to talk to me, and then we can go through it.
Okay. Adam has asked, could you give an example of a tax efficient savings or investment scheme in Spain?
Yeah, I mean, there's only one. There's a couple of companies that do them, and it's a Spanish tax compliant bonds. The rules around the Spanish tax compliant bond are quite you can't manage the investments yourself. Essentially, you can't just put in there, I want to put Apple shares in. You're not allowed to do that. They have to be managed for you. There's a few companies that offer them in Luxembourg and Ireland, and they're essentially bonds. You only pay tax when they can grow tax free. There's no problem with the growth, so as long as you leave the money in there, there'll be no tax to pay. But when you withdraw the money, you pay tax on the growth element of any withdrawal you make. So it'd be prorated. And so the tax, depending on the growth, the tax can be quite small when you make a withdrawal. Does that make
Muted. Okay. Are the tax deductions in Spain the same as in the UK? It's another question coming.
Tax deductions for
Well, good question.
No, I mean, I'm going to say no. I mean, it depends what you're doing. I mean, if you're a business, the tax deductions are different. It's a different, obviously different rules, different countries. So no, I mean, things that are tax deductible in the UK aren't tax deductible in Spain. You know, there's a rule here that you can spend. I think it's 10 euros on lunch every day, and that's a tax deduction. I don't think it exists in the UK. No, they're different.
That's a good one. Okay, I'll remember that one. Okay, we've
Yeah,
almost
I
run
think
out.
that's what. Yeah, I think that's why they have menus ideas. I could be wrong, but
Okay. We've almost run out of time, but I'm just few quick fire questions. A few banks are closing accounts for customers in Spain and Europe. Can you help with bank account opening?
I mean, we can have a look and talk to you about it. Yeah, I mean, it's not why I don't know about Spanish bank accounts closing. To be honest, I've heard more about UK bank accounts closing. People
That sounds more like it.
Yeah, that's
Yeah.
I mean, if you want, I've heard that HSBC, there's a little advert, will allow British expats to open bank accounts. That's that's what I've heard.
Okay.
This is in no way a recommendation.
Okay. Well, to wrap up, could you kind of summarize? Well, I think we got the impression because it's very complicated, but could you summarize why people should seek professional financial advice when they move to Spain? And at what point in your journey there is the best time to do that?
Yeah. I mean, obviously, like I say, everything is different here. I mean, the assumption that people used to make was that they could just come over and, hang out and stay and see if they liked it. And that's no longer the case, because Spanish there's all sorts of rules about Spanish, what Spain knows, and the automatic exchange of information. You should talk to us a year or two before you make the move over. Because, like I say, the rules around pension, tax-free lump sums, selling a property, ISAs, and it all has to be timed with, if you're going for a non-lucrative visa, it has to be timed very carefully with that. Golden visas, not so much, but non-lucrative visas, you do need to make the timing correct. So speak to us at least a year, if not 2 years before.
Excellent. Well, thank you very much, Gerald. It's been a really helpful session. We covered so much in half an hour. We do really strongly recommend that people get in touch with Chase Buchanan directly to discuss your requirements. You can reach them at the exhibition hall, or you can contact Gerald on those contact details there. Or we've done a few webinars now with Chase Buchanan. You can always go back and watch our other webinars or see their content on the Europe's Home website. Just a reminder of what else we've got coming up. We've got How to Buy in Spain Safely at 11 o'clock. We've got Living in Spain After Brexit, how you can organize all your visas and stuff. That's at 12:15. And we've got a guide to buying property on the Costa del Sol at 2, and then one about Costa Blanca at 3, I believe. So, but thank you very much to Gerald, and thank you for coming today, and happy property hunting. Goodbye.
Thanks, everyone. Bye-bye.